Today is Thursday, March the 5th, and the volume is what we've seen for the last few days. Not as high as the volume that we saw in some of the big down days and the big up days, but still 1.5 is big. It's just not as convincing. The decliners led the advancers by easily 4-1 on the overall market. You can see that there was just blood everywhere. The greens were, Kroger was there because they reported earnings. I don't know why Lilly is green. Didn't notice that earlier. Regardless, the volume on the downside was extremely high. If you look at the declining volume was 1.3 to 0.11. That's over 10-to-1 declining volume to advancing volume. That, of course, takes our market breadth down again, and it's only what we've been saying is going to happen, which is up and down. Now, if you take a look at the McClellan oscillator page, mcoscillator.com, I encourage you to watch this video with Tom McClellan. He says something pretty interesting there. Look, the coronavirus is still a threat, but you had a triple threat. You had the coronavirus, you had the Fed, who made an emergency move, and that upset the market because they don't like emergency moves. And then they determined that the 0.5 point wasn't enough. The next meeting isn't for another 2 weeks. And then the third threat was Bernie Sanders. So the Bernie Sanders thing is taken off the table, according to Tom McClellan. And Wall Street is quite happy with Biden. That's a big thing going forward. If Sanders is eliminated in the Florida primaries, or virtually eliminated, the market then only has to deal with the coronavirus. Now, he says that the Fed is likely to lower their rates another 0.5 point at their meeting in 2 weeks. But he said that's going to provide a temporary bounce, which is only going to be drawn into question in June, saying, now what? Now that you've given us 2 of these drops, maybe 3/4, a full percentage point, what else have you got left in your armament? You've got nothing left. And that's going to cause a problem in June, which is sort of perfect if you look at it from Trump's point of view, because it means that he's going into the thick part of his election with a potential recession on his hand. I won't look at the historical MAC oscillator because we looked at it yesterday, only to say that it's, once it gets below this previous 400, listen to McClellan. He says that these -400s on the oscillator are extremely rare and they're huge buying opportunities. Well, we saw that buying opportunity yesterday and the day before. We probably need to go down a little bit further before we see that buying opportunity again. Now let's look at the SPX. SPX, we're looking at the weekly now because the daily is less interesting. We're finding ourselves at the bottom portion of the weekly move. We're not as low as we were at the beginning of the week, but we're heading down that way. On the daily, we were looking at the Chiku span, and the Chiku span bounced off of the 200, came up, didn't quite make it to the top of the cloud, came down and lost the 200 EMA after the SMA was support. So not all that telling. The weekly is more important, where you see the Chiku span on the weekly being above the weekly candle 26 weeks back. That's a good sign. So we could pull back tomorrow to 29.80 and still get support on the candle. So let's take a look at that. Put a little tick there. Let's take a look at that when we come back tomorrow. The VIX, for all of the down that we had today in that huge 900 or 1,000 Dow move, look at the VIX compared to last week. It's still below the close of last week. So there's not a lot of fear. There's some fear, and it could get worse, but there's not a great deal. Look at Amazon, down 49. What do we see? We see on the weekly basis cloud support still being maintained. Apple. I think Apple's in good shape. This is just a nothing pullback. But look at the volume. The volume was quite high, but it's high because it closed higher than its low. Sorry, not today, but on the week it's got high volume, and it's still in a good range within what we saw last week. I wouldn't be too worried about Apple at this point. Now Caterpillar, on the other hand, we're looking at Caterpillar. Let's look at the 1 day. Pretty low volume when you think that the market was 1.5 times its regular volume, and Caterpillar was only 3/4 of its regular volume. It dropped, but we still have a low here, which if we put a line in the sand right there, let me see if I can draw that line in the sand. I can't. But anyways, that is the, why is motive wave now? Maybe I can't do that while I'm doing a video. But look at that, this point here, take a look to the left, that's where we had October lows, and take a look back further to August and September, and you can see that that was an area that was tested both on the way down and on the way up. So 119, let's say 120, is a valid place to look for a bounce. And being a big Caterpillar long-term supporter and loving the dividend, I wouldn't be too adverse to buying 100 or 200 shares at this level right here. Now I can do the line there because I had another indicator, another tool that I had to get rid of. So let me put an alert down there, because if I see the price coming down to 119.28, I'm even going to put the alert back at 120. And once it gets below 120, then I'm going to look for that green line. Google down 60 with support on the 200. Shopify 500 still above the cloud. Chiku span still in good shape. Shopify is just dropping because the market's dropping. It's still a strong company. Unfortunately, it's not going to help me very much in my vertical call spread. And SPLK lost its support where I put the green line, but look where it found its support, exactly at the bottom of the cloud. That is pretty important. That's pretty important that we caught the support there. But we still see the stochastic momentum indicators as possibly still moving down. Again, too late for my spread there, and I'm going to take the maximum loss. AT&T, we're still looking. We got rejection off the candle here. Finished well below this candle, but we're heading now below this candle and possibly this candle. AT&T is heading down, and that's okay because I'm half a position on AT&T, having sold it, having sold 2 weeks ago, and I would love to pick it up again under $37, under $36. Really makes me excited. Whirlpool down $7. Now that, I'm into Whirlpool now because I thought under 30 was a bargain, and I'm thinking far ahead. I have enough cash that I would buy at 118.15. So I'm going to put an alert here, and if it gets down to the 50% Fibonacci, which is right in line with these points right here, then I would feel good about buying another 100 or 200 shares. And you look at the SMIs, which are both, the short term is in a rebound mode, and the long term is down in the oversold area. So it's getting to, it's looking good. Let's take a look at the volume now. The volume for Whirlpool today was more than yesterday, but still below average. So there's no panic selling going on in Whirlpool. There's going to be an opportunity. We are as McClellan will tell you if you look at that video, we are getting to a position where we should bounce, because if we have two minus 400 McClellan oscillators, that should cause the market to rally. Short term, not long term. It's still due for a bit of a test in the summer.